Thanks, Sam, and welcome, everyone. Today we're going to take a journey, if you will, through some of the new things that have happened and why are our W-9s, W-8s different, and what new forms are out there, and what's going on. You know, what's this FATCA thing, and what's going on, and how is it impacting our organizations? So we'll start off there because I don't think any of the rest of it will make a lot of sense unless we talk about FATCA, the Foreign Accounting Tax Compliance Act, or what we call Chapter 4 now in the Internal Revenue Code. And we'll talk about what's happened and what our financial, our foreign financial institution friends are going through and preparing to do for the United States government. And then we'll talk about how that impacts our role. And then we'll add to that a look-see at the detailed forms, the W-9, the W-8, and the W-8 BENE, and then talk a little bit about what to do when names and numbers don't match, what's causing them not to match, because many of you are getting letters from the IRS now called CP2100s, and hope you're not getting the 972 penalty notice, but hopefully just the notice telling you that they're mismatched. And then we'll talk a little bit about that and kind of take this journey from the beginning of when we open the account to the back of the house. What do we do if we got the tax ID number wrong or it's missing, and kind of put this whole process of reporting together. Because what it all boils down to is that we're withholding agents for the IRS. And as a withholding agent for the IRS on withholdable payments, we have certain responsibilities and obligations, and those have just gotten expanded. There was a little law, and it was called in 2010 when Congress passed the Hiring Incentives to Restore Employment Act, and that added Chapter 4 to the Internal Revenue Code called FATCA. Now, previously, we've been living under Chapter 3, and Chapter 3 means that's the Internal Revenue Code, withholding of tax and non-resident alien and foreign corporations. It contains Section 1441 through 1464. When they added FATCA, we got a whole new chapter, and it's the taxes to enforce reporting on certain foreign accounts. And it brings a lot of work into the foreign financial institution realm. So what this boils, as we begin to look at this and kind of break down piece by piece what's going on, we know that the first piece is, and the reason all of this is going on, is so that individual taxpayers will report foreign financial assets. This business about having accounts overseas and those accounts not paying taxes on them in the United States as a U.S. citizen, the whole business of trying to tax evade by having accounts outside the United States is being kind of nipped in the bud. And the reason it's being nipped in the bud is that the U.S. taxpayers now will have to report financial assets with an aggregate value exceeding $50,000. And the failure to report that on a Form 8938 that goes with your 1040 results in a penalty of $10,000. Now, as any of us could possibly guess, there's no real incentive for people to volunteer to file this, except that foreign financial institutions are now being asked to document their U.S. customers, and they're going to be asked to report that information, and they're entering jurisdictional agreements, and basically they're going to run a mirror withholding program to what we're doing here in the United States. So they'll eventually get they'll get mismatch notices and send out B notices exactly like we are. And this whole process of asking our foreign financial institutions to be withholding agents also for the United States has been a very big process, and you can tell we're not all up and running on this like it should be right now, but we have hit our first deadline, which is July 1st. I do understand from some of my reading with the IRS is that we won't see any harsh penalties on this on 2014 and 2015, but if you go to irs.gov, you can look up the FATCA timelines, and there's some deadlines that'll be phasing in over the next few years for the foreign financial institutions. And of course, here we are. And how do we get involved with all of this has a lot to do with if the foreign financial institution isn't doing what they're supposed to be doing, then any payment going overseas, that's a withholdable payment, meaning a payment that we have control over, interest, dividends, rents, salaries, any of those kind of things, then we are required to withhold 30%. So as you begin to look at the forms, and as we start to look at the forms, you're going to see all over these forms Chapter 3 and Chapter 4. Chapter 3 is the business we've always done, and Chapter 4 has to do with foreign financial institutions. So one of the things that I would suggest as you start to begin to sort this out in your mind is really getting an understanding, and here's that Form 8938 that they'll be attaching to their tax returns, those that have foreign accounts, is to really start separating out in your mind these instructions when you're looking at them, what's Chapter 3 and what's Chapter 4. And I think that's the hardest part, and sometimes when it's difficult to distinguish it, and you're going to be withholding anyway, I'm not sure that sometimes it's always going to matter as long as you withhold if you're required to withhold. So as a U.S. financial institution, you are going to be required to withhold under FATCA, which we know that's Chapter 4, if the foreign financial institutions are not doing their job. So you're going to have to sit down and document, do we have any payments, withholdable payments, going overseas? And if we do, are they going overseas to someone who is in compliance with this, either in a Model 1 jurisdiction or a Model 2, and a Model 2 will mean that they entered an agreement with the IRS themselves, where a Model 1 agreement is where the institution enters with their jurisdiction or their country basically on that. So you, as a United States financial institution, can't worry just now about, gee, the guy or girl comes in and opens an account, are they a W-9 or are they a W-8? It's also this Chapter 4 thing, which are payments, withholdable payments going to a foreign financial institution. And if they are, then are we withholding, can we document that they're registered, that they're in compliance, and if we can't, then we're going to have to withhold at 30%. So you're going to see a lot of times, like on the forms, as we go through and start to look at them, asking you for things like global identification numbers and using the W-8 or the W-8 BENE particularly to document that they're in compliance and not necessarily their tax status, their Chapter 3 tax status. So this is, it takes everybody's kind of like a what? I had somebody email me this morning, and they said, I read the whole W-8 BENE, and I still don't know what I've read. And really and truthfully, there's a lot of that going on right now. I still don't know what I'm supposed to be doing. But the first piece, which is this withholding, went into implementation on July 1st, so everybody's still kind of reeling from this and taking a look at the forms. And it's sort of interesting that, the W-8 BEN and the W-8 BENE came out in February, but the instructions for them, for the W-8 BENE at least, did not come out until June. And so we're seeing some of the instructions just start to develop on what you have to do. So I want you to leave today, and it's really important that we leave with, we're going to be reading all these detailed instructions. You're going to be reading them. There's lots of them. There's lots of different forms. But you want to leave with kind of a little action plan about what we need to do about FATCA. And so the first thing that I would suggest that you do is get your forms up and running. Certainly want to get the new W-9 in place, the new W-8 BEN, and the new W-8 BENE. Now, once you get them in place on your systems, that's great. People have to understand how to fill them out, which is probably the more challenging part of this. But the new substitute W-9, the language that's recommended on the new substitute